Right, guys. So yeah, so basically, just going off what we kind of mentioned on the chat earlier about taking the trades against the SMC traders. So rather than waiting for a significant inducement of the previous daily high or previous structure high, whether that be daily or weekly, we can actually trade into their stop losses, especially if there's liquidity below, right? So if we break this day down, so if we have a look, if we look to the left, this was the last, let me just remove this actually, make it all nice and clean. So this was obviously the most relevant liquidity from the prior day, right? We can see there's equal highs there, price broke structure lower, and then Asia basically took that, right? So there's no relevant liquidity above. And then what happened was, as soon as we made this low, we left an SMT, and then price pushed away, right? So then the day opened by Asia creating liquidity to the upside and then breaking lower, right? So there was no inducement high to maybe trade into to sell. Price literally just built up, took that price, took that liquidity, and then left this massive imbalance SMT with a huge wick, right? So obviously we tried to sell from the London high into the stop losses, but then price, what it did instead was we created some equal lows. Price never broke structure lower, but instead it broke structure higher, right? So we know there's a lot of stop losses underneath this level, and of course below the demand for the swing traders, right? So as soon as price, let me just replay the bars so you can kind of understand what we're looking at here. So you see, as price now breaks out, this is clearly visible that we're only trapping buyers, right? We know there's no sellers above, there's only stop losses below. So now we're looking for potential opportunities, right? So now what time is it? 9:30. So our timing window was obviously 8 till 9:30. So this is obviously out of timing. And then what we do is we just decide to shoot higher and higher and higher, right? We come into basically Asia high, and then what time is this at? So out of time, and again, look, 10 a.m. price just breaks into internal structure. It doesn't take anything to the left, and then it just basically rolls over. So that wasn't a high probability setup, especially for us. And then look what happens. So at 11 a.m. price dumps, takes out all these breakout traders, equal low traders. So all these stop losses have now basically been liquidated. Now the question would be, okay, so now that these guys have been taken, is there more stop losses below? So that will be based off mainly the reaction of this zone, which is what happens, watch. Boom, right? So because we have a significant reaction of, what is it, like 15 pips, something? 16 pips, right? So what we'd want to look for is, we know that this, we know that this isn't the real inducement, right? And the only traders that got in here is just breakout traders, right? We've never mitigated anything, we just broke out lower. So there is obviously some liquidity there, but there's not a lot. There's way more, there was way more liquidity below. And now because we've had this significant reaction, and we're slowly breaking structure internally to the upside, there's obviously people who are angry that they were stopped out at these levels, and now they're obviously looking to re-enter. So there isn't an entry just yet for us, because we're thinking now, okay, so if this wasn't supposed to put a cross there, but I'll put a cross and that as well, just to signify that that's not the real inducement. So we know that that's not the real inducement. There's not a lot of liquidity above. We've had a significant leg down, we've had a reaction. So now we're thinking, okay, so is price going to come up here and then take the relevant liquidity, or are we going to continue rolling over? So that now what we would do is watch price to see what it does. Okay, it's starting to stall. It's pulling back down again. Pulling down, beautiful. So let's check the 5 minute. Okay, so 5 minute, we've had a nice bearish engulfing candle. 3 minute, we've left an imbalance with a nice POI. So now I'm thinking, okay, so because there's still more liquidity now to be taken here, way more below than above, probability wise, we could be potentially a sell, right? Because we didn't, this wasn't the real move that got made. It was a fake move. Obviously, we tried to obviously sell from around this area, and obviously we got stopped out, right? So the sell failed from there. This we know wasn't the real inducement because it happened out of timing. It didn't take anything to the left, so it's irrelevant. And then price just dumped, took liquidity, obviously took enough liquidity to make a reaction. And then what happened is obviously enticed more traders to buy. So what we'd look for then is we've had a nice internal breaker structure here. Where's that little trend line gone? Bang. We'll drop it on in 30 seconds. We'll check the reaction. Oops. I just played it by accident. Yeah, so what's happened is, if I just rewind a few candles there. Bang. Right? Look at how high it came up the POI. At this point, I'm thinking, right, it's probably going to blast through, it's probably going to go. And then what happened was, it started to print these vector candles back down. So this is essentially what we look for, either a bearish or bullish engulfing or multiple vector candles. And the next candle I think is a continuation as well, right? So we'd basically be looking at getting in at these candles, stop loss just above, and then we basically target that previous previous daily low, which was here. And we'll let price play out. So as soon as we got them vector candles again on the higher time frame, look how fast price moved away from POI, right? At this point you're thinking, well, obviously, what's the higher chance for it to just reverse randomly from this smart money trap or to continue going? Well, we know that this is a previous daily low. It's a massive structure. We know that most traders put their stop losses below structure points. And look how fast it runs to TP as well. It basically instant profit, barely any drawdown, bang, just takes off. So that's an example of how to trade against smart money traders and supply and demand traders and basically most retail traders. So you got to just basically weigh out the probabilities and understand that if this happened during timing, right, this inducement, then that would be a completely different scenario. But because it didn't, and it didn't really trap a lot of liquidity, only trapped a few breakout traders here, and then dumped, pushed away from the S&T again, trapping more buyers. We've had an internal breaker structure, mitigation, which was that second window at 11:30, and then move got made. So yeah, beautiful trade. This was basically 1 to 6.5.